Eric Muathe, Muathe.com. It is December 1st, 2016. Let's take a look at how markets are beginning the month here. A little bit of a different look and feel here. The Dow is posting a small gain. NASDAQ is down about 1%. And that does change things a little bit. So let's take a look here at crude oil, which is up about 4%. VIX is up about 5%. All right, let's go to those charts. Let's begin with the NASDAQ weekly. As I discussed 2 days ago, man, it looks more and more that this is going to be a problem for the market in the coming weeks. Let's take a look at the NASDAQ. By the way, if we take a look at the 2-year, we can see that what is emerging here is a situation where the NASDAQ is failing to hold above the previous weekly closing high. Another way of saying that right now, the weekly breakout is in question. And so after breaking out and spending about 2 weeks above the previous all-time weekly closing high, we are now back below this number, which is this closing high there. Failed breakouts are notorious for taking markets lower. Just keep that in mind. And we can see here also the line that we've been watching for resistance and a level for the market to consider how it was going to respond is now acting bearish. That's another red flag. So remember, the market is doing this on its own. It's not like we are doing it. Market is choosing to do this, so it means something. And let's take a look at that monthly chart. The monthly chart poses the biggest risk for the market. As you can see, the last time we hit that level, we had a period of down market action, and so you can see resistance here, resistance there. For the highs there, we had a major drop. We've come here over the last, let's call it 4 or 5 months, and what we've done in essence, and this is a big deal, is we seem to be forming a double top. Now, as long as the NASDAQ is down for the month, this creates a very, very, very bearish situation. I mean absolutely, this is the word to use. It sets up the stage for a major potential drop. I'm talking here, 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 or even here. Would be the potential for price targets. Of course, all these price targets here are guesstimates. Another way of looking at this is to really understand that because the NASDAQ is now back below the previous high, in other words, we closed the month of November above that same level of 5312, we are now back below it. So we can conclude this right here. Anything that keeps the NASDAQ below this number suggests that we are now looking at the potential for a major correction. If the NASDAQ, and it's not out of the realm of possibility, if the NASDAQ can figure out a way to turn back and change its direction, and let's say if the NASDAQ is back above this level and breaking out, then we can change our mind. But the picture right now, it's only been a couple of hours into December, so let's not get too excited. But as long as the NASDAQ is trading below 5312, we are looking at a failed monthly breakout, failed weekly breakout. This is absolutely bearish. I would suspect with this look and feel, we are pointing at the possibility of substantially lower general market charts. If we go to all data for the NASDAQ, let's take a look at all data. Get this right here. All right. So, couple of lines. Line number 1 goes to the previous resistance line. Coming here. Resistance there. Resistance, and then we broke out. And that was a big deal at the time. We moved above that level. Market broke out there. Let's extend that line this way. And what we have here is an emerging bearish look. In fact, this looks very, very ominous. Resistance on that red line, failure to move above it with uniform action for the highs right there. And now over the last 4 months, we've hit that twice. So the more the NASDAQ stays down and confirms double top rejection here, I tell you, we are looking at the possibility of markets going down. as long as this monthly chart remains the same. Now things could change. Now keep in mind also there's another way of looking at this. Go back and figure out where the NASDAQ broke down recently. Oh, by the way, before I forget, I should point out another problem that is emerging here and still ending up with the same conclusion is an improvement in month-to-month closing highs. Take a look at the RSI for the NASDAQ. The RSI, unfortunately for bulls, RSI failed to move above 61.8 as the market made all-time highs. That's a biggie. It's huge. I mean, this is the worst type of negative divergence, the worst. And the fact that it's happening on the monthly chart with a double top is a problem. In other words, what I'm talking about is while the market was making improvement in price highs here, month to month, we formed a double top, and rejection at 61.8 is a major, and I don't know how to stress this enough, but it's a major red flag. Just remember that. Another way of looking at the situation here is to figure out where the movement began off the recent highs. So let me show you this. So the NASDAQ had broken down here, and that slight breakdown was good enough to take it off the highs of 2015. So we're talking about this break right there. That break brings the market off the highs here, and we have a bearish reaction here towards the end of 2015, early 2016. So we draw a line from there. This line again happens to be at about 61.8. So I'll draw it right there. And I'm going to go backwards because I want to show you the importance of this line for those of you who are new to this concept. We broke down here with the rejection in early 2000, which is here. And we went into a major bear market. I mean, major. We broke again below this level here, which is also back below that red line. Red line again happens to be at 61.8. Once we broke down here, we went into a major bear market tailspin for 2008, early 2009. Now we are coming back in 2016, and unfortunately, as of right now for bulls, this is double top on the same line that has been a problem. Man, this by itself really is a caution to all of us to suspect that with this look, that we are looking at a major bear market setup. Okay, let's take a look at the daily for the NASDAQ. And for today, number one, take a look at this situation here where the NASDAQ made a higher high day to day. And the higher high in price did not correspond with an improvement in the RSI. That negative divergence has set the stage for a pullback. Also, this level here, which was the break. So let me get that. So this break here brought the market off the highs there. We hit that level for the highs. Let me get that right. Actually, this break here brought the market off that high, and then the actual high came on the same red line. So let me draw that again. Don't want to confuse you. So that break there gave us a warning sell signal for the highs there. We come back and tag that same line with uniform action rejection for the actual highs. Those highs were important because we subsequently drifted lower. Now we've come back and we've done uniform activity above the line, back below it. Today we see the NASDAQ moving below 50, which is why we are having this huge down day. Okay, let's take a look at the Dow daily. And the Dow daily is giving bulls a reason to be excited about the potential for higher prices. Keep in mind, I've been saying for a while, and there's good reason for saying that, as long as the Dow is trading above 69.1 on its daily, don't expect the market or the Dow to be pulling back. In fact, I've been saying that we're going to see the RSI move off 69.1, make a lower high. The NASDAQ, the Dow most unlikely is going to go lower. make a higher high. It is the negative divergence I suspect that is going to set the stage for a pullback as far as the Dow is concerned. So the Dow might have to make a fresh high while the RSI makes a lower high before we can get the actual high. Generally speaking, stocks don't drop from this strong strength. Anything above 69.1 is a sign of strength. And you can see of the three markets, the main markets, the Dow, right? We get Dow Jones Industrial Average, SPX, and the NASDAQ. And it's a good lesson for all of us. This is the only market trading above 69.1. It is the only market that is positive right now. These markets are off 69.1. This one is way off 69.1 and it is down. So the strength here is, you can see the strength of markets above 69.1 is why the Dow continues to be holding up very well. If you take a look at the Dow from by the way, let me explain this because it gets a little bit confused. What does this mean? What does this mean? It means, yes, the market might pull back, the NASDAQ could be pulling back, but it's not the worst setup right now. In other words, you might have to be patient. Even if eventually the market breaks down, it's not gonna be like right now. It could take a while, couple days, couple weeks before all these things fall in place for a pullback. Or maybe the NASDAQ recovers. In fact, let me go back to that NASDAQ daily chart, and unfortunately I'm rambling on here, but for good reason. Oops, take a look at the NASDAQ. Okay, NASDAQ daily is what I want. And the NASDAQ daily is coming back to test. Number one, it's testing RSI 50. So testing this RSI 50, if it holds with uniform activity, that's good. And I also think it's back testing the previous breakout line. It's back testing this previous resistance line, extend it. It is back testing this line. So if it can coil back above the blue line, it might be good enough for a recovery. Let's go back to that. Let's go back to the Dow and take a look at the hourly. The Dow hourly is holding above the previous resistance line. So this resistance line here was a problem. Let me draw that a little bit lower. So somewhere around there. This was a resistance line until we broke out above it here for this entry. We've been using this line for support, and now we are coming back to test this line. So the Dow is not going to drop until it moves below that line. We can also see evidence of this by taking a look at the 30-minute chart for the Dow. I discussed this in the last video analysis. You can actually look at this from this point of view, which is that the market is coming back essentially to test the breakout level. So there was a breakout level here. You can either extend it out this way, and you see that the market's been bouncing nicely on the line. Bounce on the line here for this re-entry, coming back to test this line. So if the market can bounce on this line short term, the Dow continues to be strong. Otherwise, a break below this support line, a break below that, then the Dow could be looking to join the NASDAQ, as the NASDAQ is one that is down the most off recent highs. Now, the Dow is only up about 40 points this month. Remember, it's very early on in the month of December, and the Dow could easily turn down and be negative. This would not be good because this is where the Dow stalled. Now this stalling point here is what brought the market off the highs of 15. We dropped again. We are coming back here in late 2016. Looks like again uniform action rejection here. That is a problem. So once the Dow turns down for the month, it joins the NASDAQ with the bearish look. If we go and take a look at this from a long-term monthly chart and draw the line where we expect there to be potential for resistance right there, and you can see clearly this is an area the market needs to be very careful. Break below the red line and this trend line led to a major breakdown in 2000 here. We go into a 2-year bear market, 2-year, 3-year bear market. We break a trend line here, and also below this red line off the highs there, we go into another crash type situation here. We hit this level with uniform activity here for the highs of 2011. What I'm trying to say is that as long as the Dow is coming back, and potentially, of course, we don't know, but if this is confirmed as resistance month to month, boy, again, here's another market that ultimately is also showing signs of this being the case. Take that away, consider the other aspect which we saw on the NASDAQ, which is the fact that we made an improvement in month-to-month price highs for the NASDAQ. But take a look at where the RSI did perform. We are making a lower high. That negative divergence sets the stage for a major situation where the market could easily decide the next major direction is lower. And we can say the same thing with about the S&P 500. Whoops. And it's very early on in the month, but the S&P 500 right now, you can see we made an improvement in month-to-month price highs as we close the month of November. But take a look at where the RSI stalled. RSI stalling at approximately 61.8. So that's a bearish look. As long as S&P 500 is negative for the month, I'll draw a line around where it is stalling right now, assuming it stalls going forward. That line has been a problem over the last two major bear markets. This is not just an opinion, it is a fact. And because it is doing this, you and I don't have the ability of changing the charts. The market is doing this on its own accord. But you can see here, trend line break, moving below this red line at about 61.8 for the highs there. It's a major bear market, 2000, 2001, 2003. Again, just like we saw for the Dow, you break this trend line, you go to the most recent bear market, which is this period. So what this means is not that the market has to drop all the way here. It could drop for 1%, 2% and recover, who knows. But it sets the stage for the possibility of a major correction, given this is now double top rejection on that line. Also, just to point out here is this very bullish period. Okay, that bullish period corresponds with when the market was above the red line. And now that we are below the red line, we see that the possibility of opposite type action, resistance here, market pointing down, would suggest that the swing trade is now looking like it wants to favor downside action, unless the NASDAQ, Dow and SPX can figure out a way to break out above the red line. So with a down S&P 500 for the month, you have to be careful trying to play the market from a bullish perspective. Now, I make a lot of videos, lots of them this year, probably more than 500 videos. Okay, I have a feeling this video is gonna be important going forward. I just get the sense that something is developing here, especially if the market stayed down for the month. Boy, these monthly charts are absolutely scary. And I just get the sense that as long as we are showing this resistance, the odds of a market going into a major multi-month, multi-year correction are now back on the table. Let's take a look at the USO. And on the USO, one thing I did not point out here is this observation that the USO is moving above RSI 50 this month. So it could be that by the end of the week, which is today being Thursday, by the end of the week, which is tomorrow, it could still be holding on to most of its gains based on the strength of the RSI moving above 50. Okay. Now what is also happening here is if we go back and take a look at the previous 5-year weekly chart, even with this weekly move, essentially what we are doing is coming back to test what has been a reliable resistance level. And I'll show that here in a second. This break right there led to the market coming off the highs of 2014 when crude oil was at about 110. We draw a line from here, and this has been a problem. In fact, just a little bit lower. This has been a problem. We touched that level for the highs there. We tagged it again for the highs there, and then we are coming back to tag this level here. So week to week, If we find resistance on this red line, then that would be bearish short term for crude oil. At the same time, if crude oil can figure out a way of staying above the red line, then that would be a change since the break here. If you take a look at the daily, you can see the daily is coming back to test potential resistance levels on the daily. Take the top side, extend it out. Remember, you are not doing this. I'm not doing this. The market is doing this on its own. So we have to respect what that is trying to tell us. And also you can see that it is coming back to test the previous break of the highs of around June. Once we broke down here in price, RSI broke down, and since then it's been a problem spot. We draw a line from there, which is what we call the uniformity method, and you can see rejection with uniform activity for the highs there, rejection here for the highs there, and now we are coming back to test that. I would speculate around here we could stall. Take a look at the hourly. The hourly is already showing potential for resistance. Keep in mind that we're going back to the highs of October on the hourly chart. That break right there brought it off the highs. We draw a line from there, should be slightly below 69.1, and you can see we tag that same level. No questions about that. Since then we made a short-term high. We are coming back to do the same thing here. So I would look at this as suggesting that even though you don't want to be necessarily making trades here shorting crude oil because of the weekly chart strength, as we go into the end of the week, you might start thinking about setting up some positions to the downside, because if the daily chart confirms resistance, weekly chart eventually confirms resistance, and the hourly chart is already confirming resistance or rejection, you can start building a position on the short side. Want to take a look at GLD, and I'll only look at this from the daily chart. One simple observation that I've been talking about is the fact that the daily continues to trade below 30.9. That simple observation would have kept you from this slide here. So as right now continues to be below 30.9 until it moves back above this number on the RSI on the daily. I would say that gold continues to be trading heavy. Let's take a look at some stocks here, and I'll talk about one ETF we can watch. I go to that Apple daily chart. If you go back to the video from about 2 days ago, I talked about resistance here. Simple analysis, but has that been correct short term? Of course. Double top rejection there, as we speculated that that Apple was going to pull back. It's pulling back. So as long as it's below this red line, in fact, that's one view. Keep in mind this also translates to double top rejection at the 50 level with uniform activity. That's also another bad sign for Apple short term, and the fact that it came back to test the break level. So we can actually draw it a little different. So draw it this way, and then draw a line from there. You can see pretty much what we've done is double top rejection with uniform activity above the blue line and back below it, which is also another sign of a short-term sell. So the pullback in Apple is consistent with what we were expecting. Now I want to give you some ideas. Let's go to ACIA. This was one of the leadership stocks in the last couple of months. Nice uptick, but now I suspect if it breaks below the recent weekly closing low, you can sell this. So wait for this to give you a confirmation of weakness if and when it drops below 62.89. A break below that would confirm that the RSI is moving to all-time lows, which is what you want. And we can see that the MACDs are already trading at all-time lows. So this one is a candidate, but only if and when it moves below that 62.89 level. The other stock that we can also look for a sell signal is SPG. And here this one is already confirming a sell signal, but take a look at the monthly chart. You can see that the monthly chart meets our minimum requirement in that it is trading at 3-year lows. So that's a minimum requirement met. And we can also see that the MACDs are also pushing to 3-year lows. So in terms of minimum requirement, this one absolutely meets the minimum requirement. One of the MACDs at 3-year lows. The main MACD is just now about to move to 3-year lows. So it meets the minimum requirement on the monthly. We go to the weekly for an entry point, and we can use this recent weekly closing low for a stop now that it is below that level. So the stock is breaking down and is giving a fresh sell signal now that it is trading below 178.65. If for some reason it moves back above this price range, you want to get out. But in my opinion, this is a good sell signal now that it is breaking down below the recent weekly closing low. The other stock that we can also look towards for lower prices is CALD. Take a look at, let's go to the monthly chart, and the monthly chart is meeting the minimum requirement right now, moving to 3-year lows. So that's one of our minimum requirements being met, and the other requirement is for the MACDs to move to fresh lows or fresh 3-year lows, and absolutely that is also taking place. So it meets the minimum requirement in terms of RSIs and MACDs. What I've done here is use the recent weekly closing low for a sell signal, and let's take a look at that. The stock is just about to break down. Let me give you that level. So you'd want the stock to confirm weakness by moving below 15.35. So once you see it move below 15.35, you can sell it or go short. And if it recaptures, if it drops below 15.35, you can sell it. But if it recaptures back above that level, then you want to close that position. So it's only good as long as it is trading below 15.35. Let me switch gears here and give you an ETF that we can play, and it is a way to short real estate. It is SRS. And here, the reason why I'm putting this as an idea is we have the possibility of this ETF moving to 3-year highs, which would be one of our minimum requirements. MACD is here, probing the level, and could move into 3-year highs, could move above zero for the first time, and of course it does meet the minimum requirements. What we need here is the instrument to move above the recent monthly closing high. That level so happens to be at 40.55. So wait for this one to break out. Don't buy it until it breaks out above 40.55. That's one view. Otherwise, you have another entry possibility, which is the previous and recent weekly closing high. So if you want to wait for this to move a little bit higher and confirm strength, it would have to move above 40.93, which is this closing high here from about 4 weeks ago. So that's your secondary buy point. I would say once it moves above 40.55, it is a buy. And you can always initiate additional buy by if and when it moves above 40.93. Or you can say, you know what, I'm going to wait for more confirmation of strength. I'll just wait for the weekly breakout above 40.93. So both of them are valid. You can either wait for the movement above 40.55 on the monthly as your entry, or you can wait for reasons to buy it when it moves above the recent weekly closing high of 40.93. All those are valid. Those are the ideas for now. Of course, I'll keep you posted. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ACIA.